Yes, what a market. I mean, there's no quiet in this market these days, whether it's the Fed or the dollar or FTX or I mean, there's just anything. You turn any direction and there's something new bubbling up. So it keeps us on our toes, but like I always say, volatility creates opportunity. So again, whether we're in a bear market or a bull market, there's always opportunity. You just have to look for it.
By the end of November 2022, the Bitcoin price prediction remains bearish under $16,360 support, which will become resistance. Protests in China, the world's second largest economy, have had negative impacts on stocks and cryptos around the globe. The cryptocurrency market is falling as a wave of investor jitters swept global markets, fueled by protests in China against ongoing COVID restrictions. Hello and welcome to Money Talks. In today's video, President and Chief Market Strategist at InTheMoneyStocks.com, Gareth Soloway, updates about Bitcoin market standing and price performance, including possibility of a new market bottom and the upcoming bull run. Gareth Soloway also talks about the FTX collapse and why regulation is much needed in the crypto space.
Yeah, so there's a lot of similarities with it. I mean, you talk about the earth-shattering kind of event that Lehman Brothers was in terms of shaking the industry to its core, and I think you've seen that in crypto. I mean, this is really the big earthquake if you're looking for one. And then what you're looking at also is how does the crypto market come out of this? And one of the interesting things when you look at how an exchange in crypto is virtually the same as a bank is in the economy, right? So the banks obviously lend, they give you leverage, they give you all these kind of things to do. Well, that's what the exchanges do essentially. So there's a lot of similarities in what they are and ultimately how they failed, right? Lehman Brothers took risks that they shouldn't have taken. They leveraged themselves up way too much. FTX did the same thing. So there's a lot of those similarities. And then you look at things like the charts and you start to say, okay, did the market bottom when Lehman Brothers collapsed? And the answer is no. It took about 5 to 6 months to bottom. So you start saying, okay, if this is a Lehman Brothers moment, when does this give us? Does this finally give us that timeline when crypto could bottom? And I think it does. And I also think that if you look back to the 2008, 2009 period, you saw these banks misbehaving like a lot of these exchanges are, Celsius, Voyager, and now FTX. And you saw regulation come out of it. What was it? It was Dodd-Frank, right? So you have that functionality, which is now likely going to come out in the crypto markets. And so again, what I did was I looked at the charts and I said, okay, well, when Lehman Brothers occurred, how long did it take for the markets, the S&P to bottom? That was 5 to 6 months. And then I also looked and I said, okay, well, what type of fall did we see following? In the following 5 to 6 months, how much did the S&P fall? The answer is about 40 to 45%. So if you take 40 to 45% away from the current levels on Bitcoin, it puts you right around $9,000 as a potential low.
The brutal bear market continues, with crypto investment products last week experiencing their biggest outflows in 3 months, according to a new report. Digital asset investment firm CoinShares said that investors took out $23 million last week.
And in all fairness, I mean, I understand that perspective. I think that it's somewhat misguided because, again, number one, Ponzi schemes are a little bit different in their functionality, but I think also you look at the US dollar, and who's to say that that's not a Ponzi scheme? All we do as a country is borrow, borrow, borrow to repay debts that we have. And it's kind of just repaying, and we just borrow more to do that. So in many senses, you could say the US dollar and the US economy is built that same way. But the key is that Bitcoin is now being adopted by more and more people. There's big money involved. I think FTX is a major issue because it really creates mistrust in the crypto industry. But again, from mistrust, regulation will come, which will create transparency. And once you have transparency, that's where real trust is built, right? I mean, before this, we didn't have transparency and we were just hoping that everything was fine. But we know now that's not the case. And so you have that transparency that comes from regulation. And that's what's going to drive big money to invest, in my opinion, in Bitcoin and in Ethereum.
Inflows, investors putting money into crypto products, were experienced only in short Bitcoin funds, which bet on the price of the digital asset going down. $9.2 million was put into such funds, the firm said.
I think what people are discovering, and what's interesting is, I've been saying for well over a year that we needed regulation in the space. And again, the key thing is you just need common sense regulation. Now, whether our politicians can actually come up with common sense, I would doubt that. But the hope is, and you have to look at it like this, right? Is it better to have no regulation and then people doing what Sam Bankman-Fried did and mismanaging, client funds and over leveraging and basically people losing fortunes or all their money? Or is it better to have some regulation in the space, maybe a little too much just because our politicians generally do that, but is it better than nothing? And for me, I'm an investor. I want to make money, right? So for me, the deregulation, or I should say the decentralization, isn't as keen of a point as whether or not Bitcoin goes up. Listen, if Bitcoin goes to zero, it doesn't really matter if it's decentralized or not, right? You have to have the foundations of trust, and you have to have rules and regulations to do that. So my hope is that the government doesn't overregulate. I think that for the most part, gold, or I should say Bitcoin, is the digital gold, and that will create its own kind of intrigue once we get transparency in the system.
The negative sentiment continues from the previous week when institutional investors bet against crypto in record numbers. CoinShares said the move by investors to cash out stems from the fallout from FTX. Crypto markets have been rattled after FTX, once one of the biggest digital asset exchanges, lost billions of dollars of investors' cash in a quick and violent crash.
Yeah, so number one, gold's already had an awesome move. I'm sure we'll talk about that in a minute. I mean, that's had a great move off the lows as the dollar has started to kind of trickle down a little bit. But I think when you look at Bitcoin, like weirdly enough, if you don't get regulation, I think you could argue that cryptos will eventually go to zero, right? Because think about this, after FTX, and you had a bunch of big money. I mean, Tom Brady, Gisele Bundchen, Kevin O'Leary. I mean, all of these big players were involved in FTX. And now everyone saw that blow up, and there's no sports stars, there's no celebrities, there's no big money that is willing to go near any crypto anymore until they have some sort of transparency, because it's not worth their fortunes. It's not worth their reputations now, right? You have some major tarnishing on reputations. I know there's lawsuits being filed and all that stuff. So the question is are there enough small investors to really create that push in Bitcoin to have it go to 100,000, to have it go to $1 million? And again, I don't know that. And I think that's my biggest concern, is that without that transparency, without that regulation, you're not going to lure the big money in that can really drive it to the upside.
FTX collapsed after it became apparent that it used client money to make investment bets through Alameda Research, a trading firm founded by the exchange's ex-CEO, Sam Bankman-Fried.
So that's such an interesting thing, because in reality, it's probably smarter for the central banks to kind of clamp down and the politicians to kind of just get rid of it, because then you only have one option, the US dollar. I mean, you can say gold, other currencies, but this is the beauty of politicians. They all want to get votes, right? It's all about doing what's popular. And right now, the popular thing that's going to get them votes is to get regulation and transparency and make it so a lot of their constituents don't end up losing money in the future, right? They want to be seen acting like, oh, people got hurt. All right, how do we act and make ourselves look good? And that's the beauty of it. So in a weird way, if politicians were farsighted, meaning they looked really far out, they would probably get rid of Bitcoin and get rid of crypto. But they're also micro viewpoint, right? They all want to get reelected in 4 years here in the US. And that's one of the reasons why I think you get Bitcoin to stick around, you get crypto to stick around. And it actually helps the crypto case here.
So, do you agree with Gareth Soloway's 9,000 prediction for Bitcoin bottom? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.